Hey, good morning. This is Meir Valensky with Driving Markets. Yesterday, Jerome Powell gave his testimony to the Senate on the state of the economy, and he stated that they underestimated inflation. Wow, they massively underestimated inflation. Not just him, but also his colleagues underestimated inflation. However, he did say that the US economy is resilient and can withstand further rate hikes, which means, as I see it, there's going to be significant rate hikes. And I would suggest that the economy in the US can tolerate rate hikes up to about 4% without having a major impact on the economy, because there is a hell of a lot of money floating around over the last 2 years, 3 years from the stimulus packages, which is running at about $4.5 trillion. In fact, there is a view or theory on the street that the 1.9 trillion that Biden authorized was probably not necessary, and that just fueled inflation even further. So inflation is here to stay. I'm not sure what impact rising interest rates will have on inflation. I'll tell you why. Inflation, the main underlying cause of inflation was the supply chain disruption, and that supply chain disruption is not going to be impacted by raising interest rates. Overall, rising interest rates will dampen consumer confidence and give the consumer that fear factor, that nervousness as to where are we going with the economy, and therefore will hold them back from spending. So it will have an impact. But remember, inflation is mainly there to reduce consumer demand. And at the moment, the consumer demand is so high and the supply is so low that I'm not sure if it's going to have the desired effect. In fact, I do believe that inflation is going to be a lot higher than actually stated. And I've said this over and over again on all the broadcasts. So again, I would put my name on the line and reputation, say inflation and interest rates in the States by the end of the year will be running at 4.5%. So you can replay this video in December. Let's have a quick review where we are then on interest rates. But I believe they're going to be 4.5%. I've stated already from the beginning of the year that they're going to be between 3.5% and 4%. The question is, will they get to actually 4.5%? I'm willing to bet on that they will get to 4.5%. And let's look at some other things. So Binance US has cancelled all fees on its crypto exchange, and that sent Coinbase down by 9%. The cryptos are going through a bit of a hellish time at the moment. Over the weekend, Bitcoin did drop to around about the 17,700 level, and then significantly, jumped up to 21,500, which showed good signs of support at the 17.7 level. I do believe short term it's going to go well below that. I'm calling it at 10,000 in the next month or so. Bitcoin and the other cryptos will follow suit. Remember, Dogecoin went up quite a lot on the back of Elon Musk pushing it and saying he's willing to back it even further because he likes Dogecoin as a crypto. And I was speaking to an investor yesterday, and it turns out that if you look at Dogecoin, for example, the downside is, 4 cents, 5 cents. It's not a big downside, so it may be a good bet long term. You could lose all your money or you could make money. At the moment, it's probably a 50-50, the way the sentiment is in the economy. Overall consumer confidence is running at pretty low levels in the US and in the UK due to the worries about inflation and interest rates. As interest rates rise, then you're going to have an increase on the cost of borrowing, whether it's your mortgage, your car loan, business loan, etc. But also the cost of living is going up, and everything to do with supporting the house is also going up. However, even within a down bear market, there's always opportunities, and you should be looking at those opportunities and say, okay, where can you pick up cheap stock, cheap assets, going for the trading for the day, 2 days or 3 days, whatever your trading is. There's always volatility and the markets are jumping around, because even though there is a trend downwards, there's no absolute clear direction, and markets will jump around. There's plenty of money out there to make money, whether it's on crypto, FX or commodities, as I stated yesterday. And that should also be there in front of your mind, that you can make money on down markets as well as you can make money on up markets. The factor today is that the younger generation, those people up to the age of say 30, 35, have never seen a bear market or recession, so they're not really equipped on how to deal with it. The older people like myself, who are 165, then they can deal with it because they've been through a few recessions and they understand what needs to be done. They've got some experience under their belt. So when trading, look at a couple of opportunities. If you're worried about the bear market, you can take on defensive stocks, but on the day trading, you can definitely trade the cryptos and the FX and some of the high growth stocks like the Teslas and the Amazons, because they jump around and all you have to do is catch them within the range, managing your stop losses and your limits, and you should be absolutely fine when it comes to that. This is Meir Walensky. Catch me on Instagram, Twitter, YouTube, etc. Have a good day.